and the recording, and that's it. We're ready to go. Good morning, officially. Welcome out, everyone, to the Market Watch Group Weekly Market Prep. My name is Scott. I'll be your host. Good morning, press. Glad to have you. First thing in the morning. Michael says, I can't do coffee. Oh, what? I can't not do coffee. So we balance the world. All right. Not advisors, not brokers. No advice, no recommendations. This is for education and illustrative purposes only, as always. What are we doing today? Market posture. So September is a crazy month. We know that. We were hopeful. We still are. I am hopeful. Still am. That the strength of our deep V was a differentiator from last year's. Last year at this time we had a correction, but it took a couple months. It was 3 different bearish drops that culminated to create the correction that it ultimately was. And this time it was just like wham, wham, just like smash down and smash back. You're like, whoa. And then that's more bullish. It is, right? That strength of that recovery is more bullish. But now it's like, are we done? Are we out of the woods? Is there more? There's still some vol. We can see it in the VIX. So here we are now really trying to get a sense of what is it? I think, we talked about this. I believe I said 1/2 to 3/4 of a point. 1/2 to 3/4 of a point is the expectation of our market posture to drop, which is not like, oh, we're so, that's the sellers taking over. Okay, now we're kind of dialing in to see what is it going to be. So to me, it's an important week. Economic calendar, the jobs. We'll talk about last week's because we do want to process what we think it all means. We're getting closer to that, right? One more week until we get to that Fed cut. Will the Fed be able to push things for us? Okay, so we'll look at the economic calendar this week. What does it have? What does it mean? Sector searching. We just actually added. I'm actually going to take this off of the Sunday agenda. We don't have time for sector searching. We're moving that to the Tuesday evening. So searching for me. I don't know. Do you guys ever search with Glenn? Does he search or does he review? I wasn't sure if that's something he does to find new opportunities. Either way, it doesn't matter. But we'll do sector searching on Tuesdays when we look to, cultivate our watch list. So we won't do that today, but we will do some watch lists. We will look for an early week opportunity list, and we will talk about this week's trading plan section of the week. He searches often. Good. Okay. Excellent. We just finished risk management. I hope you have your 3 core pieces at least. Portfolio heat, which is your overall account trade risk. Trade risk, which is your risk per trade cap. And that can deviate, keep in mind. What do I mean by that? I have some systems that trade less frequency. So I might say on that system, it has a great expectancy, but a lower frequency, meaning I only find a trade like once or twice a month. That's not something I expect to find a lot. Bounce trades is what I find the most of. So bounce trades, I might have 1.5% risk, where a trade with a lower frequency from a system that has a lower frequency, I might be like, you know what, I'm going to take that at 2 or 3%. I'm okay with that trade having a greater impact because I know that I don't see that trade very often, right? And so that's more of an advanced perspective, but something that we definitely want to talk about. Okay, let's get into it. Where's my charts? There's one. Yeah, it got nasty on us, didn't it? And that's the thing is we had all of this buying strength. Boom, 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 boom. Just kept coming. Never really had much volume, though. That's what was hard, is it's like, what does that mean to us? It doesn't mean that the buyers weren't strong. It means that the sellers just simply weren't there, which doesn't matter to me. The combination of increased buying pressure that we can see on the volume versus decreased selling pressure, either way, we had the price action that we had. This was a substantial amount. Look back over the last 6 months, you don't see anything even remotely near that. This was a pretty good move back here. That was pretty good. But yeah, right? You don't see anything even remotely close to that deep and fast show by the buyers. And so after it got to the old high, we're like, okay, that makes sense. We're at resistance now. And when we saw it start to come down, it's like, yeah, that makes sense. And then right through here, we're like, okay, can it find some support? The answer is not yet. Right? So Friday just came sweeping in and we got down to here. Now, where is here relative to, that's actually the start of the move down there. I don't do this a lot, and I'm not going to score this, but just for fun, funsies, I'm going to draw a fib. I'm not going to leave it, though, because we've worked so hard recently to clean up. There's our fib. Now, it doesn't matter if I connect it here or here, right? I can show you how that's the case. Nope. I'm going to edit that drawing. Activate it. Why can't I? There we go. If I move this over, you'll notice that the fibs themselves aren't changing, right? They're just a result of the depth of this line. When I move it left to right, all it's doing is just changing the trajectory. That's why I'm right, this angle of this dotted line. So where are we? We're still not down to a 50% retracement. Anything 50 or higher is more bullish than anything that comes down into this lower area. So we're kind of very close, right? We're very close. Bob mentioned that the futures are down. Well, remember that they're closed right now because we're 24.5. They continued selling in the after hours, but at 5 o'clock Eastern, they're going to open back up. And that's when we'll start to see like, okay, how are we coming out of the weekend? What's the expectation? I think that there's we should definitely be thinking that it's likely to be in here and it's likely to test. Let me change my color in here. You can't quite see it, but I'm going to color it. Do you guys see that little yellow box I kind of drew? Sorry, it's not great, that color. So it's likely to, like open in this area and then maybe sell down into here, whether it stays there or then comes back up. This is kind of where we think, we might get that hammer pattern. This is not at all unexpected. What does that mean? That means that I think it could gap down, Michael. Yeah, but I don't think a big gap down, right? Like right now you can see this would be $1.50 is what? 0.3%? Right? 0.3% gap down. But yeah, I think we could be. But it also could be, we know, remember the other pattern I talked about that may show up that we should be thinking about, and that is a tweezer hold. So this is one possibility that we may see tomorrow, and that's the hammer, right? Okay, let's talk about another possibility. We should have at least a few possibilities. Down to the 537 mark, and then testing right away. Yeah, certainly it could. I have it a little bit above that, but certainly into this area or even further. Absolutely. What would a big bull hold look like if we open, if the futures come back up and then we see any kind of strength? That would be the biggest. That's a tweezer hold. And then we have anything in between, right? So I would say the last thing, and this is the worst possibility, we gap down and we sell and we hold. Right? That's the worst part. So what I am doing, any trade that you held, you should be thinking, what would I do with this trade in any of these situations? Right? What am I leaning towards? I'm leaning to the first one. I'm leaning towards us kind of in this area to begin with. I absolutely think we may test down, but seeing if we can't pull back up. That would be what a hammer type pattern, right? Not leaning like I want that. If I'm saying what I want, I would love to see this thing just kind of hold, even if it doesn't get all the way back up to the top. The hammer I would expect tomorrow. I think tomorrow is going to be pretty pivotal, right? That's a awesome discussion to start the day. We haven't even gotten into the posture yet, you guys. Amazing. Okay, you know what? Just for this week, I'm going to let this group decide. Is it interesting to leave the fibs on, or should we just take them off because it's just not what we normally look with? I'm going to leave it up to you guys. You know where it sits in the priority level. Bob says off. Boom. Three fast answers like that, and it's gone. I don't even think about it. I was leaning towards removing it, but if you guys wanted it, Graylin's like, I'm sorry, Graylin. They just smashed it so fast. They're like, off. Note the numbers. Ooh, that would have been good if I had done that, but I didn't. 537. Yeah, we can kind of get a. You can actually see what's interesting too is this particular candle right here is the one that like correlates with where we are, So that's kind of like that breakout where we thought it was kind of stalled and then boom, and then it just moved one more time. So that's an interesting place for it to try to find some support, right? There you go. Okay, let's go posture. So, this will be good since we have Slap, who's new. This is our weekly routine. Slap. Every week, we start the week with this routine. Do we not have Steven this morning? Where we just assess market conditions, one component at a time. One component at a time, making sure we understand what is the market that we are dealing with now. So we're not getting yanked around by intraday, by news, by talking heads, this, that, and the other. So we had a nice little run. We can see it here. The bulls came in 2, 3.5, 4.25, 5. Where are we going to be here? Let's take a look and see. So the long term, I think, was going to be an interesting one, but I kind of preemptively said, I'm going to leave mine alone. Even though, and you can see we have this green line. We have this green line, and it did break below it, but it hasn't done anything else. It didn't make a lower high. It was the same high. It didn't make a lower low. So I'm going to leave it for one, because if it just immediately gets back up in, I don't want to be reversing that quickly. If you changed yours already, if you're like, I already dropped mine 1/4 point, great. Stick with that. This is one of those times where we try to be as objective as possible, but there's always going to be some small discretionary piece where you're like, So if someone's like, yeah, I scored it because it broke that green line. We broke down from it. That's enough that I'm going to drop it of 1/4 point. Okay. I get it. Oh, nice. Appreciate it, Clint. So I'm leaving mine, but I was leaning and it was so close to yes, we should probably take that 1/4 point. So where were we? Bob's 1 1/4, 1 1/4. Okay. That makes sense to me. I'm leaving mine here. We'll see what this one does. I think this one's going to drop. I think we said that already, but let's go take a look. I almost went to 1 1/4. Yeah, I think here we it's tough. We got to a higher high. From here, anything above this is a higher low, but we haven't made one yet. Yeah. I think 1 1/4. I'm going to drop mine down. I'm going to drop mine down to 1 1/4. Overall, it's not like we look at this and think, oh man, look, the sellers are so outrageously strong. I mean, they certainly, it looked like it was going to try to hold here, and then it couldn't. But it's just one day. So overall, I still see the buyers more in favor than the sellers. So, I think 1 1/4 is fine. How about anyone else? How are you seeing it? What's the concern? Obviously, we had this resistance, but remember that this resistance is like all-time highs. If we get above that, there's nothing there for resistance. So do we still consider this to be, let me go blue with this. Do we still think this is cup and handle? For me, as long as it's not, once it's below 50%, it's no longer a cup and handle. Right? Once it's below that, it's no longer. And so, actually, Clint, it stayed above the 100. The green up here is the 50. So it got below the 50, above the 100. So it's kind of in that no man's land, but I'm still okay with it. Like nothing untoward. I'm good with my score. What level was the 50%? 537.12 is what Clint marked it as. So we have to, which is probably pretty close to that, the 100 right there. Yeah, right above the 100. So the 100 holds, then the cup is still intact, and I'm still okay with things. If we break below the 100 and close below the 100 this week, yeah, then we have to reevaluate, be water, right? And be like, okay, that's things now look worse. It's a midweek slide that we have to be careful of. Real quickly here, since we've scored these, well, let's do short term, or let's do volume, and then let's take a quick look back a year ago, because it's relevant. So Bob's 1 1/4, 1 1/4. I'm 1.5, 1 1/4. Volume, I think I'm dropping, you guys. Let's drop this thing down to 1 month. Oh, I'm on. Let me get to the other chart. Sorry. Let's drop this down to 1 month daily. Okay. Well, now this is interesting. This is not 63.2 million versus 62.6 million. That's not above average. This is above average. So it gets a mark here. Boom. That's above average. This is above average. This is above average. This is above average. I got a score of 2-2. Tie goes to the buyers. Yeah. So 2 for the buyers, 2 for the sellers. Does anyone see it differently? Let's give this a quick sanity check. We started here. We ended here. We maintained a positive slope. We maintained a positive slope. I'm going to leave mine at a 0.25. Press says, why a buy for 815? Because we are looking for quick review. Bob is asking for. Okay, perfect. We are looking for above average volume days in our assessment, right? How do I assess that? I have a 20-day moving average. That's the green line on my volume. So I'm looking for anything that is above it. So you can see above, above, above. This one is above. It doesn't necessarily look like it. One way you can, which is weird. But if you look here, oh no, wait a second. You're right. Who said that? Miguel, you're right. I thought I saw 63, but now I think I was sitting too far back and it's only 60 million. Good call. I'm taking this away. That means that's a good call because I swear I saw 63. Maybe I should put my glasses on. This one back here is close. So I want you to notice that I have 63,276,000. That's the day's volume. The average is 62,600,000, which means it really only had about 600,000 more, right? 600,000 more, which is not enough. We need 5%. So if I have a 60 million, I need 63. Right? If I have 100, I need 105. I need at least 5%. That's it. It's not a huge requirement. Some people are like, you need 150% volume. That's such nonsense. You don't get that on the SPY. It just doesn't happen. But that's it. If anyone else sees what I'm missing, let me know. Miguel says that I was off. He's right. So we actually didn't have any above average volume days until these last ones. And now that we have 2-1, right? I'm going to give it a 0. I'm going to give it a 0. And a 0 is still fine for me. We have a overall an upswing. I actually, which is funny because I think Yep, let me show you real quick. I think I evaluated this on Friday and said I was going to drop it. So I was like, oh, what did I miss on Friday? But it turns out I missed reading the volume figure today. How do you put this on, Pop wants to know. So I'm going to come up here to my settings. Now, what I have is a simple moving average. But if you notice in these settings, when I put a simple moving average, by default, it gets applied to price, but it gets applied to the close But what I do is I move that down to the volume, and then it changes it. So all you have to do is go into the settings, go into your moving average. So all I have is a simple moving average applied to volume. And when you say okay, it's going to put that sucker down here. And then you can easily see which are the ones that are important to us. Hopefully that makes sense. Okay, so now, oh, I wasn't a drop. I was already a 0. God, I'm like lost my bearings on my own posture today. What's going on? Come on, Scott, get it together. Ooh, I bet they do. Additionally, if you don't love interactive broker charts, you could always look at like, why am I blanking on the chart service that I sometimes pull up? Trade, no. Oh my gosh, I'm like completely blanking on it. I use it to sometimes look at cryptos. It'll come to me. TradingView. Sorry. I kept wanting to say TradeStation, and I knew that wasn't it. TradingView. Okay. TradingView has pretty good charts that you can, I think, get for free and set up watch lists and things where, you know, they do have a lot of indicators that you can put on and things like Fibonacci's. And I understand about interactive brokers. They just don't put a lot of thought into their charts. Okay. Simply curious, how do we conclude buyers are in control of the last candle? Okay, so Slap, what we're doing here is differentiating two things: market posture and trading posture. So market posture is an overarching assessment of market conditions. You'll notice that when we went in and we looked at long-term trends and short-term trends, we didn't mention the terms support or resistance, which if you're conducting technical analysis and you don't mention support and resistance, that's terrible. But we weren't conducting technical analysis. We were conducting trend analysis. All we're doing with trend analysis is finding the trend and measuring the strength of the trend. Now, with some trends, you can't always just be like, oh, I have a perfect trend to measure and draw. So we have mechanisms that allow us to add and subtract quarters of points or half a point to recognize what buyers and sellers are doing, because we're trying to understand the overarching, right? Because once you're in the minutia of the day to day, when you're in the weeds, it's very difficult. Right? It's very difficult sometimes to remember and have a good sense of what our overarching assessments should be providing us as far as guidance on what we're doing. So this Sunday is for market posture. During the week, we talk about trading posture, which is, what am I doing today? So when we talk about, the sellers definitely had control of that day, right? That day. We don't want that day to inform more than it should about what does that day mean relative to the bigger picture. And so what we're doing now is the bigger picture. And in the bigger picture, we definitely can never let one day overwhelm and provide too much. Like, oh, that day was so bad. Well, yeah, but how does that day fit into the bigger? Remember that what we're doing is, and it's a great question, most of what we do is really about understanding institutions. If the institutions are buying, the market goes up. If they're not, it doesn't. It's that simple, right? Like, that is what it boils down to. And so we want to understand, are the institutions feeling good? Because if they are, we are. Are they nervous? If they are, we are. Right? Well, we just do it faster. That's our advantage. And so that's what we're looking to make sure is here we're like, hey, have the institutions fundamentally changed, or is it just a little bit of that short-term weakness? Short-term weakness is what we're keying in on for now. It could change. And that's what we look to be able to do is make those adjustments very, very quickly. Phenomenal question. No worries, Bob. Let's get to the second half now where we start to see some of the other aspects. What's been strong? Major market. The NASDAQ and the Russell have been strong in moving things. Let's see if they continue to do so. So let me reload this. Now, Slap is something that Sandy has pointed out. Everything that I'm doing, there's a link for. So if I've looked at it, you can go in there and find a link for this exact. You can find this exact link just waiting for you. Major market analysis. And when we do sector rotation, let me get this one ready. This link is waiting for you. And if you want to look at anything that you see me using, you can just kind of go through the resources and links, and you can see all of this stuff is in there. And if you go into our content library, like there's a video for each of our different components of our market posture. So you can watch like, hey, what are we doing with this? And why are we looking at it this way? And what does it mean? And what are the implications? So you can see one piece at a time. So you can go get yourself caught up. And I know you're probably like, what the hell are you people talking about in here? I get it. I get it. Okay, so let's see what we have. These are market days, David. Great question. So what he's asking everyone is down here in the bottom corner where we're looking to, when we do sector rotation, major market analysis, we have to have multiple time frames in order to see the momentum. Right? And so when it says 200 days, that's 200 market days. That's approximately 9 months. If you look at where we are, we're going back to late November. So maybe it might even be a little closer to, it's late November. So yeah, 9 months, maybe 9.5-ish, right? So from there to now, who's winning? Financials. Financials are strong. We like to see that. They've pulled back, but they're strong. Utilities, that's not. We don't like to see that. That's not what we like to see. Sorry, I'm on the wrong one. I don't know why these are, you know what? I'm actually going to reload these. I don't know why these do this sometimes, but they do. It's kind of a pain in the butt. I didn't get the other one. Yeah, stock charts. It's not working great right now, is it? Anyone else doing it right now and having a problem with theirs? Stock charts. Okay, there we go. There we go. Oh, I'm glad, Slap. We're glad you joined too. What do we have happening over here? Everything is, so one of the things we're doing with this is we're trying to understand, is everything moving similarly, or do we see a shift in the market that represents moving out of growth and into defense, or out of defense and into growth, right? So we want to understand the appetite for risk with the market right now. Oh man, stock charts is terrible today, you guys. Mine is just, no matter what I do, it won't work well. That's all right. We'll figure it out. Okay. Let's go to 133. So we started around 9 months. And what did we see? We saw the NASDAQ. I mean, you can see just kind of a clump. All of these just behaving very similarly. with the Dow lagging. So if this was defensive, we would expect the Dow to start moving into a leading position. Well, not on this time frame, at least. We haven't seen that, right? So let me go down to 133 days. Now, if you look at 133, now we're starting at the end of February. So we're about 6 months back. And what do we have? More of the same. The S&P is actually on the top, right? Then you have the NASDAQ, then the Russell. This chart is terrible today. Then the Dow. Yeah, I mean, here's the deal. For me, this is not shifting by who's leading what, but I'm probably going to drop it a quarter of a point because I don't think it makes sense for it to show a 0.75. I want to hear your guys' thoughts on this. Let's go to 66 days. Now we're dropping. So we went 200, then we went to 133, then we went to 66. So 9 months, 6 months, 3 months. So now we're just kind of focusing in. You can see what that's doing is that's moving our 0 point. Now we're back at the beginning of June. From the beginning of June until now, what's happened? From the beginning of June till now, the Russell and the Dow are on the top, and they're behaving very similarly. S&P in the middle. NASDAQ is dropping. And this is where we score it. I mean, everything is still holding up sideways at least. I'm dropping mine to a 0.5. It was holding up, which was interesting. That's not what I wanted. But it doesn't make sense for me. I don't think it makes sense for that to be scored that strongly when we see what we see. I want to hear everyone's thoughts on that. Yes? Yeah. So overall, it's more bullish than not. So here's what, if you look at what we have so far, our trend has held up. That's what we see from our long-term, short-term. 1.5, 1.25. We're saying that the institutions are just sort of, they've held up. The strength that they've showed has held up. Right now, nobody's in control between buyers and sellers as far as the volume goes. From a major market standpoint, we're still seeing more appetite for risk than not. We haven't seen any shifts that indicate people are flocking into the Dow and out of the Russell and out of the NASDAQ. It's all moving sort of in a lockstep. So sort of just a correlation that indicates status quo more than some kind of a shift to more defensiveness or more growth orientation. Yeah, okay. That all makes sense. Remember that we're coming out. We did just touch a correction. We had a 10% dip not that long ago. So is there still some remnants of that as we come out? Yeah. So, okay, let's go look at sectors. So sectors really haven't, there's been a lag, right? Because why? Well, because we certainly haven't had our normal leaders, technology, moving in. And technology adjacent, which is communication services, have been a little lackluster. We did have financials and industrials make strong moves. And so that's cool. But let's see if it has any continuation, because it's been more neutral than anything else. And I'm a little cautious about the VIX as well. Okay, so let's go look at the other component. I love the discussion going on. Market data. I think maybe, I don't know if it's slowing, and here's why I say that. I think you're right. I would use the word hesitating, and the reason why is because we already slowed, then recovered. So we have to decide, is it slowed, recovered, and then it's starting to accelerate towards another correction? Slowed, recovered, and is now hesitating. We know we're getting close to the Fed. I mean, I agree with you that there is hesitation. For me, I haven't decided yet. Does it look like it's going to be like we're just waiting? I don't know. It's a great discussion for us to have, I think, right? Concerned over multiple revisions to the Department of Labor numbers, for sure. Although that's, pretty common. Going into an election typically has uneasiness, which ironically, as long as we don't have, and that's where you got to wonder. But if you have a winner, the markets are pretty comfortable. When you have uncertainty after an election, the markets really don't like that at all. Okay, let's get back to scoring this. I got to hurry up. Definitely there was an adjustment on Friday. Did we score this? What did we score here? I lost my train of thought talking about all this other stuff. Major market. Oh, yeah, we already dropped it. Let's drop to the 22 just to take a quick peek ahead. And you're going to see, look at this. This is what I mean when I say this is just everything moving exactly the same way. Right? There's no read on this. Was the NASDAQ a little stronger for a minute? Yes. But overall, yes, that's a great, thank you, Sandy. I'm going to pull that up. Well, everyone can. If you see what Sandy just posted, the seasonality chart, we know we're in the throes of September, right? And October, where things can be, and we're just starting. Typically right now, we'd actually be seeing more bullishness than drop, but it doesn't always follow lockstep. So we don't think that's a crystal ball. We just know that September and October have that type of tendency, right? We saw it exactly last year. We actually used that last year to help pinpoint when it looked like it was going to bottom, if you remember. Okay, so yeah, I think that that one was when we looked at the 22 day, it confirms that there's no shift. What do we have in sectors? Financials at the top, utilities second. Already it's just like we have one growth, one defensive. When you think defensive, think, what do I need? I need to heat my house and turn my lights on. I need to eat and buy toilet paper and toothpaste. That's our staples. Need to go to the doctor to some extent and buy medicine. That's healthcare. When you think about growth, think about if we're building things and growing things, then we're financing them. That's financials. We're building them. That's industrials. Technology is obviously always going to be an important part. Look where technology is. That's the struggle. And are people buying things? That's consumer discretionary. That's another struggle. Yeah, it's a bit of a mixed bag in sectors. Here's 133. Strongest sector on 133 days is utilities. There's never a time where we're like, hey, I really hope when I look at this time frame that utilities is the strongest thing. That's not how we see it. There's financials and staples. So financials is growth. Staples is defensive. There's the market. There's only a couple of things above it. So yeah, we're not getting a lot. There's some confusion in sector rotation. That doesn't mean it's bad. It just means that we haven't seen the next wave of where institutions are going next. I know institutions are sitting on piles of money still. They've been sitting on piles of money literally since the pandemic. 66 days. Who's on top? Financials. So it's a growth in the first position. Then we have utilities, healthcare, and staples. So then it's like 3 defensive sectors. Then we have discretionary and industrials below that. Yeah, I don't know. This thing's, Who's on first? I mean, it's growth first, then 3 defensive, then 2 more growth. It's not a great pitcher. I don't think it's enough to pull it back to 0, but I'm not going to do anything else with it. I'm fine with mine at slightly above 0.25. So yeah, leaving it the same. All right. Michael found, that's a nice one. Right. That's exactly what we saw. Utilities leading is never something that's going to let us score this thing very high at all, which is why we're very close to a neutral score. And that's where it's been hovering, 0.25, 0, 0, 0, 0.25. I mean, if someone scored there's a 0 now, I'd be like, yeah, I don't argue with that. Okay, let's go get to the VIX, and then we'll go through our watch list. So for the VIX, we want to go back out to 6-month daily. Okay, volatility, what are you going to tell us? So for me, it popped. It did break out of this consolidation zone and it got to a higher high. But that's it. It kind of turned, but it never, right? This needed to get below this line, but it didn't. And then it got up and it didn't get above this. So if you look here, I'm still seeing this as one overbought level. So from here, if we were to pull back and then do this, that's still a higher low. We're not out of the woods yet. I don't see that as a higher low. To me, it didn't. Let me make this a little tighter. It didn't. This is not up, down, up. This is still just up. These are we can't get like shook by like these types of things. It's up. That's what it did. It moved to this level. Now from here, we have to see what it does next. Does it have a small pullback, a bigger pullback? Does it get all the way back down into this range? That wasn't a huge jump, but I'm still concerned. This is going to definitely pull my score back. Why? Because we broke this line. That is what is going to cause my score to drop right there. Right? It broke and technically higher high. I could go half point. We'll see what we think. Let's go take a look. Definitely at least to there. I'm actually thinking because it broke the if it breaks the consolidation, no, I'm going to do that. That's what I'm doing. A quarter of a point. So we dropped a quarter here. A quarter here, quarter here. Yeah, okay. Our score dropped by 0.75. How bad is that? Well, it's not even the full amount we gained from the week before. We gained 1 point. We gave 3/4 back. 1 step forward, 3/4 step back. How do we do? Still progressing. Right? Still progressing. So for me, I still see us in a situation where, let's go back to the SPY, where I would be willing to put new bullish trades on. If this stabilizes and starts to turn. Now, that's the thing, right? We're not just like, oh, so this is what I mean when I say now we have our market posture. So now we're shifting. We say our market posture is pulled back some, but it's overall still bullish. So what does that mean? It means I'm ready to trade if I get signals. Now when we shift to our trading posture, we say what? Well, on Friday, the sellers pushed hard with volume. Is that the time we put bullish trades on as sellers are pushing hard with volume? Of course not. Of course not. What we're saying to ourselves is, are we thinking, hey, let's try to jump into some bearish trades real fast? No, I'm not bearish. I'm not like, hey, let's try to catch some. Well, that doesn't make any sense. I'm saying, hey, let's evaluate this, because if these sellers run out of steam and this thing holds above that 50% mark on our fib, and we still maintained a bullish score, then I'm thinking the buyers are going to try to push. Even if this just made a move from this area here back up to the old high and turned it into a triangle type pattern, right? There's opportunity for us there, right? Of course there is. And that's trading in the direction that the market's preponderantly already going. That's what we're doing now, is we're shifting this to say, if our posture shifts, so what's my trading posture right now? Neutral. It's neutral. It's not bearish. I'm not actively pursuing bearish trades. That's, if someone says their trading posture is bearish, I assume they're out finding and pursuing bearish trades. I'm not doing that. Is anyone out there doing that? Finding and pursuing bearish trades? Or are you neutral? You're sitting back and waiting to see, does this dissipate and then turn into, right, where we're like, hey, look at that. Now we're looking to trade our next set of bullish trades. So neutral is waiting right here to see if our next signal comes. That's how I would describe myself. Let me know your thoughts. Let's go look at our watch list now. Okay, so I lied to you and said I was going to update the watch list, and I didn't yet. So you did last week on SPY. Now, those are day trades, Bob. If it's day trading, it's a little bit different. Right? Very, very short-term trades are very, very different. If you're neutral, if your overall trading posture is neutral, that can definitely open up the door for intraday whatever, right? Intraday up, intraday down, either one. I had 2 requests to put my score up real quickly, which of course I will agree to. I'm going to probably take 5 to 10 minutes of your time. We're going to go a little over. I apologize in advance. Hedged, Clint hedged. I love the hedge. You guys know I love the hedge. The hedge has to be a part of what we do. Hedge is not bearish though, right? It's a bearish trade, but you're not bearish. Subtle, but different. For sure, right? So the hedge is yeah, I love the hedge. I would say that when I look at I thought about it, Miguel. I thought about a half, right? But so if you put yours in, I love it. You guys know I'm working on a mechanism for us to have our group range. I love the range. So let's find it real fast and then let's do our watch list. Who thinks they're the lowest score right now? I'm 4-5. Who thinks they're the lowest? What's the lowest we've got? Is anyone below 4? Anyone in the 3s? Let me know. And then at the same time, who's the highest? Is anybody in the 5s? Exactly with me. 4-2-5. Bob's a 4. Okay. Sandy's a little above. Anybody in the 5s? Let me know if you're in the 5s. Right? Now, here's the thing, Slap, and this is for you and for everyone to remember. We don't believe that we have a crystal ball now because we all agree on this. Could the market just come in and just slap us all in the face with a 3% sell-off day? We recognize that what we're doing right now is not equipped or meant to be a predictor of market outlier days. We know that. We know that we're still subject to that, right? Those things are still going to come and do those things to us at times. It's just a matter of like, hey, do we panic? Do we hold? What do we do? You know, how do we sit through it? What's next? Yeah, I mean that's I think we all agree that, you know, the market's always going to be the market. It's still a lawnmower, and we're still blades of grass. So you know, okay. Love it. Okay, you guys, let's get to that watch list real fast and see. Because we need to see the watch lists, I think. And here's why. Because I look at things like Apple and I think that still looks strong as a cup and handle. It's still holding its 50-day. Until it breaks that 50-day, I think it's got a good chance of holding and breaking. Apple's a leader in technology. That's what we need for technology, is a leader going to make a bounce and make a move. Aflac, I mean, look how strong that is. I'm still waiting for it to pull back, but that's very strong. Amazon just crapped out. I'm sure you probably... I'll be curious how everyone did with this one. Did you squeeze some? Did you lock some gains in? Did you take a loss? Did you break even at the end? But that one definitely, I mean, theoretically, if you're still in it, I'd be like, well, it didn't break support. It never came back down. I took some and then stopped on some and ended up just a little under a wash. And I would get back at it, just so you know. AXP, I don't love how far it sold on here. I'm going to keep watching it. But we have others in financials that are, you can see financials across the board. That one got beat up a little bit. Bank of New York Mellon. Bank of New York Mellon looks actually fine. And if it holds this old support level, I still like it. BLDR is holding up. That's a industrials. It broke out, new high, pulled back, holding at the new old high, new low support. Yep. Carrier, industrials, looks fine. And you can sense the buyers they're sniffing at it. But here it is, still holding up. So I'm looking at some industrials. I'm looking at some financials. Caterpillar, no, not as much. I like BLDR and Carrier, though. Colgate Palmolive, yes. I don't know. I don't know what caused our riff, but we've healed. Consumer Staples and I have healed, and I'm ready to trade with them again. Oh, goodness. Looks strong. CMG, yes, Sandy. I like this as well. I think it's all is forgiven. I think they had to forgive me this time, actually. I'm like, please, I'm sorry. I just lost my mind. I wanted this one to show that the news had been put behind them. It looks like it has. So yeah, I'm thinking about that for sure. Costco looks great still. New high, higher low. Carvana pulling back. Don't love that. Breaking the 50. We might throw it off the list soon. The Dow sitting on top of the 50. Fastenal. It's at least holding its bottom support level now, but looks more channeling than anything. Bitcoin. Oh, Bitcoin wants to test all the way back down, doesn't it? Gold is holding up. General Motors, I think, looks great for a cup and handle. If it holds the 50, I'm thinking about it. Nice deep V. Google. Yeah, so you can see why. As soon as Google got back down to this, I was leery. And as soon as it broke, that's it. It's off. So when we see things break consolidations like this, we know that it has to hold. If it held here, that was tradable. The second it doesn't hold here, it's like, now what? Now it's got a whole new consolidation. Now it's got to do the pattern all over again. It's got to stop. It's got to go up. It's got to come back and give me a higher low. Until it does that again, right? Google has once again been identified as persona non grata. Excommunicado. Cannot be traded until it is now forgiven for its transgressions. Goldman, still holding up. It's a little below the 50, but if it can stabilize, right? Oh, don't skip Home Depot. Home Depot holding up above the 50, thinking about it. ICE. Yeah, Google's out. I don't throw it off the list because it's Google, right? I always watch it. The only Magnificent Seven that I'm willing to not watch is Tesla because I can't stand Elon Musk. ICE pulling back. We'll see if that can move into tradable position. Small caps. Ooh, looking iffy there, aren't they? JP Morgan, if it holds. There's some good financials if they hold. That's the problem, if they hold. KBH, regional. Oh, no, that's not a regional bank. KKR is. KBH is a home builder trying to hold. KKR, same looking pattern. Coke, I love it. Defensive. I'm 100% looking at that, right? 100% looking at Coke. I think we've got some. I think I like consumer staples more than anything else right now. Which I get it. I get it. MasterCard. So we lost AXP, but we gained MasterCard. That's a nice looking set of momentum right there. McDonald's. I'm thinking about it. Tesla. There you go. Is that the Land Rover, Miguel? Love it. I do like those. The Land Rover Defender and the Aston Martin. The Brits can do all right with a couple of cars, but 3M. Look at 3M. Looks great. Consumer defensive. The staples. Morgan, no. Microsoft. Yeah, Microsoft is not all the way back down yet. Right? We need Microsoft to perform. We need Microsoft. We wanted it here. It's still close. I'm going to still give it validity here, but Micron is a no. NASDAQ, yes. I like the indices. NASDAQ and ICE are both very strong. That tells us that trading activity is strong, right? Netflix is holding up. NVIDIA. I still put NVIDIA as a maybe like Microsoft, right? You see the No, where's my line? You see the consolidation. We got up. We came back. But it's got to be soon. PGR. Okay, there's some strength in financials. Right? Hey, if you like Micron because of a specific technical pattern, like you're like, hey, I do well trading double bottoms. Great. For me, I just like NVIDIA and TSM better. PLTR, I'm still in. Rocket had a hiccup, but I still has viability. RTX defensive, that looks strong. That's also in the industrial realm, but more in the defense realm of industrials. So we have some bullish setups. We have things to trade if the market holds up. So Monday and Tuesday are important because we've got a lot of things actually, right? TSM, I don't know. The chips are a little iffy. Look at UMP for a railroad. Strong. Industrial, right? USB for financials. US Bancorp looking pretty strong. The dollar is cooperating. The VIX isn't huge. I mean, it's 22. It's not bad. Walmart, still strong as well. Love it. Love it, Sandy. That's it. Alerts are ideas. Alerts are ideas. There will be ideas this week. I'm sure of it. Right? And then we do, and then once we have them, we do what we can with them. So yes, absolutely. Press would like to take a quick peek at the sectors. Let's do it. UUP. Sorry, did I not talk? Yeah, UUP, I mean, it's well below the 50. If you remember way back here, we were like, if this thing gets below the 50 and stays there, we'll be pretty content with it. Materials are pulling back pretty good. That's not bad to see. Really, really accelerating. Communication services, still above old highs, but like everything, not great last week. Look where energy is. That's great for us. We definitely love to see energy down. That's helpful from the inflationary standpoint to help continue easing. Financials look amazing. Strongest sector in the group. Industrials not far behind. So technology, pretty iffy. Pretty iffy. How come it reads different to the sector research? Remember with sector, we're looking at them compared to each other. These can sometimes be misleading because of this, right? When I go look at, let's say, when I go look at energy may look worse than it is because of this. But when we stack them all on top of each other in a relative fashion, it highlights interactions and momentum that you would not see if you only looked at them. 15 years ago, I assessed sector strength by going through them one at a time. And I realized I'm missing something. And then I realized it's because I need to see them relative to each other. Here we're looking at them one at a time to be like, is this tradable? Is there something we could trade here? So remember that we're not looking at this for sector rotation. You can't see sector rotation one at a time, right? Like if I were to just take a basketball team and just show you one player at a time, and skew the angle a little bit of like, is the camera pointing up or sideways? You would have no idea who's the tallest. But when I stack them up next to each other, it's so clear who's the tallest and the shortest, right? So that's where we're looking at them now to be like, oh, is this tradable? Is there something we can do with this? But when it comes to rotation, we have to see them all on top of each other, all from the same starting point. That is a great question, Press. I agree. Sandy's known for her great questions, far and wide, across the world. Multiple continents, people know Sandy, and they're like, oh, yeah, Sandy, the one who asks great questions? They're like, yes. Financials. We already said, look strong. Industrials, strong. Technology, not so strong. We need technology. Like this market can only do so much. That's why we were so happy when it broke this. But now it's like, well, it kind of feels like we're in another one of these. Right? It kind of feels like we're in another one of these. It's still a higher low. So there's still just a little bit of ambiguity if we can recover or not. But to really feel good about it, I want that to happen. I want to be like, yes, look at us. The buyers are doing it. So, we're not going to get above a solid 4 in our market without technology participating, right? And with staples so damn strong, utilities so strong, healthcare pretty strong, and discretionary not. Yeah, there are concerns in sectors. I actually think that the zero we have in sector rotation, or the 0.25, is somewhat reflected here. Consumer discretionary and technology are really lackluster. The only growth strength we have is financials and industrials. And so, yeah, there's a little bit of back and forth in there. So, all right, I've gone way over, you guys. I got to run. I feel like we're in a good place. I feel like we have a good wrap. Let's see what tomorrow brings in the morning. Remember, we'll be 15 minutes before the market opens, so we'll see the futures. We'll see what's going on. And then we'll say, hey, look, if the futures are holding up and this thing's starting to show stability rather than selling, then we're going to look for bullish signals in those areas that we've already talked about. Whew, enjoy the rest of your Sunday. Have a wonderful rest of your day. I'll see you in the morning. As always, happy trading.